Market conditions majority bullish. S&P 500 rallying this morning 1.2% after its 2.5-3% drop on Friday. Lots of volatility happening here. Let's take a look at our current structure. We're seeing a pullback back to that 6,600 range. We talked about this range right here, this demand block. Pull all the way back, tested the bottom end of that range. Obviously, this was still kind of news-based knee-jerk reaction selling that's taking place here based on tariffs and based on a lot of that conversation that's happening. And that's just the volatility. That's the world that we live in. We have to always be prepared for some of that volatility starting to take place. Happen back here, can hurt us to the downside, can help us to the upside. We just want to make sure that we are positioned for the volatility here. In this case, we're seeing that. We also saw a pretty nasty sell-off here in breadth of the market. The number of stocks above the 50-day moving average in the S&P 500 now at 36%. So we're seeing that crater pretty hard as of Friday, and that we could see that magnet pulling it down all the way back down to that 10 range. We are kind of at a support range potentially here around that 40-50% range. We'll see if today's move, if today gives an opportunity for those that wanted to sell to do so, which is kind of what we've been doing this morning, is focusing on some of the additional names that we want to reduce some of the exposure on and look at it as an opportunity versus a new fresh buy an opportunity, just because of the distance on our trend. We're at the latter end of this trade anyway. This trend is now going to more than likely start to look like this that we had last year around this time, and that is just some volatility, some consolidation, potentially another bounce here as we move higher. If we get some new, if earnings really start to take off right here, if we get a little bit more clarity on tariffs and what's happening there as well, layoffs and AI, and a lot of those things are coming around the corner here also. So there's definitely some news happening to be aware of, and in terms of the overall risk exposure, we're already at a pretty light position in terms of about 80% in cash already, really for us for about the last 2.5 months, reducing most of that exposure now down to about 10% exposure, so 90% cash at these levels. And again, it's just based on market structure and the location of that trend. Are we early in the trend? Are we late in the trend? Are we in the middle of the trend? Well, we're utilizing these indicators to help us along that path. As far as this trend, this current trend time frame from April to now, we've had this really nice uptrend, getting some volatility right here, and just a natural flow in terms of taking some of the gains, reducing exposure. VIX also seeing some climbing right here, and we saw that gradually working its way higher. It really looked like a lot of distribution starting to happen towards the upper end of this range. As we're seeing this consolidate here, we also saw VIX starting to climb during that entire time frame. Also, as we saw the number of stocks participating in that uptrend continuing to drop as well. And so interesting that we happen to get the catalyst happened to be a tweet. Remember that the catalyst is simply just going to expose what the market is prepared to do for the most part, unless it's really odd situation. So this could be just that first bit of catalyst to start start pulling on that thread and start unwinding that thread of what other things may be starting to take place that are a little bit more bearish in the marketplace instead of extremely bullish. Those are some perspectives to be aware of currently. S&P 500, let's look at some of these other charts here that closed out. Obviously, we know what's happening this morning. Friday, pretty nasty hardcore sell-off bar, solid confirmation, meaning it closed right at the low of the day. Really across the board on the Dow. Dow dropped to majority bullish 9-5. S&P had dropped to 9-5 also, I believe 10-4 before this rally. Today we're seeing triple Qs 11-3, and we're seeing the Russell 2000 at 10-4. So solid retracement. As of right now, nothing overly concerning as far as where we're at in this trend, because we have an opportunity now for demand to prove itself. If demand is going to step back in, this is going to be the location that we're at basically right now. So we're seeing a little bit of that demand today. We definitely want to see that hold up now over the next 3 or 4 days inside of this range. If not, then our next stop is going to be that 63.44 range on S&P 500, this 382 range. We're still in the momentum zone of this current trend, but if we continue to see sliding down and this is retested, again, that still could be a bullish scenario happening for markets, but we want to just we want to be aware of what's happening in price activity based on that big bar that we saw. We also saw oil break down here. Let's take a look, approaching 618, right at 618, retracement of that current trend. We'll see if we gain demand coming in right here as well on oil. Not as of yet, continuing to expand in our downtrend now with oil. Gold, on the other hand, continuing to get even more bullish now as we've seen a little bit of fear come into the market, and gold back up 375 on the ETF GLD. Dollar also showing some strength right here, majority bullish at 10-0. Interest rates, the 2-year treasury, we're seeing that at 3.53 this morning, continuing its overall sell-off, working its way back towards that 3.5 number. It's kind of right inside of that range, 360 down to 340 on the 2-year. Majority bearish across the board for the 2-year. The 10-year also getting some weakness, pushing its way back to 4% also, and majority bearish on the weekly time frame for the 10-year. A couple stock ideas to consider, not a whole lot in there today, but we did see MLYS with a nice solid confirmation bar, back to momentum. Also seeing tobacco, Altria group, symbol MO, with a little bit of a confirmation bar here as well. Again, not a whole lot to be really excited about in terms of the existing new buy signals. Potentially some of the current holdings that have been in uptrends may be looking for retrace opportunities to add into some of those names as well. Just be aware of risk exposure, where we're at in the current trend, what's happening to these internals. This one here is an interesting one. VIX also elevated at 20. Even though we're rally, I'd be super cautious of this rally today. That'll do it for today's update. Everyone have a fantastic day today.